Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, December the 28th, 2022. As we wind down the year, the markets are continuing to kind of just do their shtick for year-end position squaring and the likes. And what I mean by that is that deciding what they want to hold on to, what they're going to get out of, what they're going to switch from here to there, et cetera, et cetera. And we're seeing a lot of that. And today, again, we saw a great deal happen in Tesla. And so that particular stock did manage to cruise down towards 104. It got below 104, actually. And I'll just update it very, very quickly. So that because what went on in Tesla was pretty amazing in terms of when we look at it on the hourly chart, it doesn't seem like much at all in comparison to this very large drop that it has done in the last couple of weeks. Like this high is December the 1st at 198, almost 199. And then this low is December the 28th at 104.22. So at that level, somebody put out the rally cry that Tesla was strongly, extremely oversold. And the stock went from 104 to 115, I think it was. Yeah, to 115 in an hour. Just like, bam, that was done. And that pretty much kept control. Right in after our opening or on our opening, we saw the market line up to the sell side, and they just kind of again pushed it from, like, I think it was 113 back down below 110 and got down as low as 10. Let me get to the right day. There it is, 108.24. And then rallied again all the way back up. So it just kind of went back and forth and back and forth. As you can see, once again, Tesla in and of itself is putting in what might be a small little triangle. And I guess what I would think is like this is still part of a corrective move, part of that onslaught. And there's likely still more to come. And again, it's going to be very, very strange because what we need to get done first is more than likely this either little wave 4 or some type of a C wave up. And I think it could thrust up and then die. So again, Tesla had a lot of control today with regard to how fast the markets moved and what held it higher, what held the NASDAQ a little bit higher than the severity or the strength that the sellers were getting with the Dow, with the Russell, et cetera. That in the NASDAQ, it was there, and it certainly had moments, and the NASDAQ did end up down 132. But the fact that Tesla was able to basically stay higher all day slowed the pace at different times. So again, Tesla maybe a little bit higher. We got 118, 119. We're going to run into the hourly 50. And I would think in terms of if there were still some selling to be done at 118 to 120, I think is where the sellers would definitely come in and go, yep, that's good enough for us, and boom. And I think even in terms of the options, it could really fit well. Now, one other thing I want to point out, and we're going to start with the SPX/ES, and this has to do with the cash market. And I actually wanted to come over to here to begin with, and it sits in the options. Now, again, understand that the future has premium in it because it's the interest between now and March. So the cash market, on the other hand, is trading at 37.83. I want you to take notice. These are the options that will expire on Friday, and these are the quarterlies. So there's a little bit of time that this got built up. And right here at 38.35. The open interest and those calls is 56,924. That's pretty large. And the balance is that what I'm being told, or what I'm hearing, is that there is a put spread / collar using these 38.35 calls as, I believe, the short. So I think those calls are that the position is, or somebody has a pretty large short in those 38.35 calls. And so if the market stays below 38.35, then all is good. Above 38.35, then the market starts to sweat. So if it's long, if these are long and we're short the puts, it's still going to float itself around 38.35. And it did today. Opened there, got a little bit higher, and then went below, fighting to get it back going into the close. Right. So it closed closer to the low of the day than 38.35. So that remains in play. And now I want to go over to actually the ES. So with that in mind, we have here that we have to include the premium, but if we're working off 38.35, that the market is going to be holding. And again, I just want to go and say 37.83, and the future is trading at 38.09. So it's about 9 plus 17, about $26. So you can see the premium is contracting from when they did the roll. So I think it will continue to. So 37.83 there. Oops. That didn't work, did it? 37.83 there. And then we have what we have here is 38.10. So we're going to be using that at this 37.89 if the market heads lower. So the break really does still continue to appear that it will happen to the downside. If it's going to be a break, it'll be to the downside. But I can't say that that was with certainty because of now we have 2 days and tomorrow we have jobless claims. So we've got a couple of things that could drive the market in either direction. And this is very clear with how this is all panning out. Again, I'm counting it as this is intermediate wave 2. That's the completion point, 41.80. We've completed minor wave 1 out of 5. And now we're in a minor 2. Now either minor 2 is going to be done there, which would be surprise showing extreme weakness in the market. Or we got an A wave, a B wave, and for the next 2 days, this market's going to rally and go back to 3,900 or above as it puts in a C wave of minor 2. Now, once again, I'm going to remove this because what we're looking at right now is what if the market turns. Now, again, I'm not saying that that is what's going to happen. So I want people to get an understanding. I'm revealing a possibility. I'm revealing that is covered by the current wave count. If we break down, it should already be pretty steadily in force because of the position that the market would be in, the wave pattern that the market would be tracing out. When it's sitting and it's kind of just dawdling in between here, then you're going to begin to wonder, it's still within this minor wave 2. And if that's the case, then this is an A, this is a B, and we'd be looking for a C wave up. And that C wave could do the following. And that's good. I'm going to go right here. And what I'm going to do is put on the C wave expectations. And because it's within, we have 100% where wave C would be equal to wave A at 39.16. That fits. It fits. C wave goes out, takes out that high. 39.16, it works. And totally covers that position for at least one side of it at that whole SPX options position that I spoke about. So we cannot discount that this can happen. Now, what's going to project it or what's going to propel it, what's going to create it? It could be just the fact that we have more buyers coming in and they might be stepping into Tesla, they might be stepping into Microsoft, they might be stepping into Apple. Regardless of what's going to cause it, we've got to focus on what the index can do. And it isn't going to be a statement of, oh, gee, now we're going to looking for the Fed or anything else. It has nothing to do with that. It has everything to do with the positions that are going to be closing, finishing, expiring on Friday in the SPX options, in the ES options, and across the board in Tesla, in Amazon, in AMET, in Apple, et cetera, in Google, all of them. Where do we want equities to go year end? And that's really what's going to take place over the next 2 days. And it's going to be positioning. Okay, so we could get some decent moves, or we could just sit range bound. And then this whole thing just kind of settles out. My guess, that's not going to be the case. I really would not expect it to be the case anymore. I am looking for this thing to really start to make its move, either breaking down and getting below 37.70, which would be that low right there on the 22nd. Actually, though, it's 37.88, so 30, but definitely 37.70 would be nice. So just below 37.85. That it breaks that low, that signals that wave 3 is in force, but it's got to pick up the pace. It's got to really move, because there's only so much that I can do. I put the 2 there, and then this is 1, 2, and that what's all this? So it looks to me like an ABC up, ABC down, and now we're going to do a C wave up. That would be my take. So I would think that it's going to be easier to trade to the upside, and we might get enough follow through help from all of the component stocks. Whereas today, I think the market really could have gone down a lot harder, but Tesla, believe it or not, held it up for a lot of the day, at least in the NASDAQ, and then somewhat in the S&P as well. So for the S&P, let's keep it open. If it is going to just slide and go lower, so in other words, if that third wave, and again, what I'm showing you is the possibilities and how it fits into account. And what we now need to know is, okay, market, which one did you want to do? Because that's the key. Where are traders within all of these funds, within all of these different factions, where do they want these prices to finish for 2022? Because that's what's going to happen on Friday. They're going to come up with that number, and the battles will begin and push and shove to get it to where they want it, depending on their position. So it could be a pretty wild day on Friday, to be honest with you. Any case, on the downside, we're going to go back using the same thing, putting up extensions, but putting up extensions for minor wave 3 and minor wave 2 would have ended, not necessarily in failure, but you would expect it to take out more than that. So if that was the high, what we've seen so far, and that would have been last on the 27th, then what we're looking at is this thing needs to start to build and drop. And I mean drop, because it would be in a 3 of 3 of 3. And so therefore we've got 37.50. Right now it's being held very high at 38.10, drifted below, but 38.10. Then we have 37.50. If it starts to break down, then we have 37.04 or 3700. Then we have 36.58. Now, ultimately, as a minor third wave, minor 3 would equal minor 1 at 3509 or 3500. And I would expect more from it. So if we're going to start to really knock the crap out of this market between now and Friday, it's got to continue. It can't just go, stop, and rally. And because it would be something other than what we're looking for. So once that breaks, it's going to lean it tilt it very hard towards now beginning to kind of do a little bit of free fall. And again, it can happen. A lot of stuff still can contribute to it, et cetera, et cetera. All right. So what we got going on, if the market's going to start to break down, we do have everything still in alignment to go down, moving average wise on the hourly. I'm going to flip really quick to the daily and just kind of take a peek here. We're basically all lined up here as well, except the 20 is getting ready or has crossed back over the 50 to the downside. So we could that would put us totally in alignment where we have the 200, the 50, the 20 down below it, and the 8 and the 4 telling us get out of the way. So that's why both remain in place. This still is pretty flat. So if it's not really angling, it's trying to, but it's going to take more. It's going to take a harder drop to get this to start to sink, and for that 20 to really catch up with those as well. So the potential is there. The moving averages would give a confirmation, but they're not projecting by any means. They're followers. So they're continuing to line up for continued downside, which we're already in. But are we first going to go up and get back up to here before we resume? And that might be. Even if it runs up, I don't think the 20 might do a little turn, but the 50 will probably just get flat. So that leaves that possibility for a C wave totally in place. And then, boom. So we could get to Friday, and then as we start the new year, it starts with a drop. And we'll see. Over in the NASDAQ, don't really know of anything really coming up in the NASDAQ, although they're lining up a lot of things around Tesla. So that big sell-off in the last has really pushed a lot of positions around. In fact, Tesla traded 220 million shares today. 220 million. Believe me, that they're making some serious adjustments. That's what I'm talking about. Year-end adjustments. You got buyers and sellers, and you got a lot happening in the options, which have massive amounts of contract to expire on Friday. So I would suspect that this stock is going to remain extremely active. I would suspect that Apple is going to remain extremely active. Right now, it was only 85 million today. I would suspect that Apple between now and Friday is going to have at least one of the 2 days will be above 100 million. As they jockey for position as to where that thing is going to close the year. So that's what we're going through right now. So over in the NASDAQ, what we had today was the market really being held up by Tesla, because I think that we could have dropped harder than we did. And that would have been perfect and fit very cleanly in the count. On the hourly chart, I have left it that minor wave 1 and minor wave 2 are done. And we are dropping in a minor third wave. And that is minute 1, minute 2. And so this should go. This should go. And it is, but not. And it may end up being the 3 of 3. But I really would think that we're going to get down here before we do a 4 and then a 5. So again, the next couple of days are really going to put the strain on what the heck is the count in the NASDAQ. Truly, I think it will, because if we have some serious upside and there's more participation than just Tesla, and we start pushing back up to here, I've got to start to wonder, well, what is all of this? Is this a continuation? In other words, this minor one is not done yet. Now, that would be not necessarily astounding, but I would be like, wow, that thing really extended, and we have to understand what the implications of that are. So if we're still wanting to push that out, and this is how also I think that if indeed, let's see if I can do it on the daily. Not going to work so much on the daily. I want to get it to where I can just show a clean move. There we go. I'll do it here. So in other words, if this 1 is not in yet, and that's still an intermediate 2, and we're inside this intermediate wave 3, I have to really consider where we are. If we're going to get another serious, if this gets moved down again, and then we still have to put in a minor wave 2, it suggests that that minor 2, we're going to fly all the way up here and then die. It'll even be worse than what we're experiencing now. So it's kind of a difficult count to kind of push that further, but possibly their choices are going to be to move it up, and that we're already in that 3 of 3, and that's going to be easier to count. This actually, in my mind, counted pretty cleanly to get it down to there. And then possibly, I just have a problem continuing to move it down. And because then what we have here is if this is 1 and then that's minor 2, and that just doesn't fit. To me, it doesn't fit. It's too small. So I'm always going to be looking for something greater to fit the degree. So that's why I might have to redo all of this. But in any case, as it is, this third wave needs to pick up and go. So the outlook then for the next 2 days for the NASDAQ would not be rosy, whereas the S&P just might. Now, what continues, I think that the NASDAQ could have been down a lot harder today. But again, what held it up is Tesla, which traded up to 115. And that just, and when they do it really quick, because it's kind of pour in, and they're buying massively, as we saw in the volume. That holds things up. Now, if Tesla was continuing just to see sellers today, we would have been down at 105. We would have been down 300 versus being only down 132. So factor, I can't, because it's what happened. It's actually what traded. So what we need to do is work within it to see what our possibilities are and what the labeling would be. So right now, I'm not going to get hung up on the labeling. What I am noticing, and that's the only part that as far as fitting in what comes next, is that we continue to do 5 down, 3 up, 5 down, 3 up. And I can't really, on this 4-hour chart, let me go, and we're going to be going from that high, which is on the 26th, so 2 days ago. Let's go back down to the hourly. And from this high, that's the 27th, it's the 26th. So from this high, basically, I need to be able to count down. So that's 1, that's a 2. We're in the third. We need to continue to basically kind of slide inside this third, likely getting down to 10,667 or 10,590-ish, and into that area. And just to kind of put in wave 3 of 3. Right. So this is minor 1, minor 2. Minute 1, minute 2, minute 3. With inside of that, it's subminute 1, subminute 2. We're in subminute 3. And it's subdividing. So we need additional slides here to fit what the pattern is telling us. Right? As long as we're going to continue to do 3 up, 5 down, 3 up, I need the 5 down. And it is subdividing, so it needs to follow through on that. If it stops here, it's going to be, it's a strain, and move it all the way back up to here, puts it in a really weird position. Like then this is what? An A, B, and a C, maybe? Of what? So it gets to be a little complicated. And so, and normally the market makes it very clear. But I'm saying right now, I would be more in tune with the NASDAQ continuing to move lower. And with that in mind, we have 107.42, which got, they got close today. We got down to 64, I think was the low. What was the low there? Yeah, 64. And that support is at 42. So we got in the hood, but breaking there takes us to 10,667, and then 10,600 down to 589-ish. But I think as we start to slide, these will just become a spot to focus for a moment to see what the market will do around them. I'm sure they'll all be gone through, come back, recover, go through, recover before decisions are made by the market. Going on, we have 10,475, and then we have 10,372. And ultimately, if it truly is this third wave, we're looking at 10,094. We're looking like, okay, get down there. And can they do that by Friday? Yeah, they can actually. Now, it would be a hard sell all the way around. It would just be that, hey, Tesla, you might have been oversold. But trading 200,000 plus kind of relieves some of that, maybe. I don't know. But hey, everything's got to participate and everything's got to go hard. And that would be the adjustments that are being made in these bigger stocks. Again, tomorrow, Friday. Expiration on Friday, quarterly. And I really want to continue to focus on that because it will, for 100% certainty, have a big effect on Friday's movement. It's going to be where these stocks get placed to finish the year and also to finish this quarterly expiration after a very volatile price-wise move in many of these stocks in the month of December. So the month of December has been brutal for a lot of these big tech stocks as everybody gets ready for Friday. So lots of strange things can happen, okay? And a lot of positions can be rolled out into January. So to pushing, kicking the can down the road a little bit more. So a lot of things can take place, but it's going to involve both stock and options, et cetera. Okay, so for tomorrow, I actually am going to continue to look for downside here. All of the moving averages are remaining in position 250, 20, 8, 4. All of them. Now, kind of a little flat, but if I kind of bring it in a little bit, you'll see that they are pointing hard down. So that remains in place. And that's really going to be it. So tomorrow morning, jobless claims. Let me just make sure that I don't have something else besides jobless claims at 8:30 Eastern, and crude. The EIA numbers come out at 11 a.m. Eastern if you happen to trade crude. All right, that is going to be it for right now, and the next update will be on Thursday, the 29th. We're counting it down.